Hey, what's up, every guys out there? My name is Ruben Rodriguez from Tenacious Tribe, and here I am for another episode of our series of price action and technical analysis of training assets. First and foremost, hope you guys have had a fantastic Thursday. For those of you who are on vacation, hope you're enjoying it the best you can, And for those who did already, hope they were awesome, and you guys are fully energized and ready to take on this upcoming trading period we have ahead of us, and yeah, which has been very exciting to watch, very exciting to gaze at, very exciting to follow. This is like looks like a soap opera. I'm not here to talk you about GameStop or Bad Bath and Beyond, as otherwise you'll be accusing your false publicity, as follows from the title I'm about to choose for this video. Once I'm done here, I have another stock in mind. Nevertheless, so we cannot avoid but to comment some things. The latest state of affairs with these two meme stocks. The battle is fierce between the revenge of the retail investors out there and all the financial institutions trying to short that were shorting the stocks. Some of them already gave up and dropped the towel or knocked out and went on their way. Bravo, individual investors. Some of them, watch out for many of you guys. I mean, just be very careful. This is, uh, I got caught in something like this with GME. This was a major moment for me, my development as a trader. And some of you guys have stepped in here, and you guys are being smashed. Nothing is telling us that it cannot go upwards. It can. However, I analyze this talk for. I'm not here to grab above my to brag above my analysis whatsoever. But I analyzed this talk last week, was it? Where the price was still here. I was not expecting for the price to have jumped off so quickly, for the squeeze to have happened so quickly. I was not expecting, but it was also something encompassed in a diligent price action technical analysis. I thought that maybe it could go a little bit more to this price inflection point where it could break out and close above the trend line and then squeeze and or cut below this demand zone and then not squeeze squeeze the buyers, I guess. um, but no, but corners, as I'm going to tell you a story about corners. Corners don't have a favorite place to happen, and this corner short squeeze happened yesterday. It was very powerful, and yeah, nevertheless, the resistance area I've drawn before and the supply area is being respected, so this would have been a fantastic target for you guys. Classical technical analysis says that this market after downtrend is meant to accumulate a little bit and then resume on this uptrend if it does happen, or cut below this demand area and resume a downtrend. um, Everything can happen always. Be attentive to the price action signals and try to be exquisite, fantastic at reacting to what the price is telling you and finding up good risk reward setups, where you can trade from. Same follows from GameStop. A lot of carnage and blood and tears in the battlefield. I uh, I must tell you, I'm enjoying this. I'm following up this soap opera, and I'm enjoying it thoroughly, seeing what unfolds here and trying to learn from further from the valuable lessons that these moments in trading have got to offer you, as I did back in January, in February, when I was trading GameStop. But the reason why I brought these two charts to your attention today was not to brag about my analysis. No, not at all. It was because, by curiosity, I must share this with you guys. I'm reading a book right now which is called "That Will Take the Utmost" from the Edward Chancellor, and it pretty much goes through the history of speculation as of the Roman Empire, and the underlying idea is that it these same histories, the same stories, the same emotions, the same patterns, they keep on repeating themselves over and over and over and over again, unlike with other industries. Or perhaps I'm about to read something else in other industries. It's called Lessons from History. Right now, I'm reading this one from Edward Chancellor, and yesterday I was reading 19th century speculation history in America, and I've seen something very curious which almost made me laugh. Let me just put the charger on my laptop, and I don't wanna get out of this screen to read out loud, but it was something like this, that corners, as they were called back in the 19th century. These are words from the author, to the extent that I can recall them. Corners are not a new thing. They've been here all along. They've been here since the beginning of history of speculation. But it was as of the 19th century that they became an 19th century in America that these figures became an hallmark. And then he goes on explaining what the corner was, and it was pretty much buying positions from a low float stock, which often does not have same intrinsic value as the price portrays or makes you think it does, and try to squeeze the buyers or the sellers into covering their short positions. And this was profitable because at a certain stage the short sellers had to settle for any price that the buyers were asking for the stocks to be covered, because they were obliged to cover. Daniel Drew, I remember he's called the Big Bear of Wall Street. This is one of the originals. I remember he had like sort of a 2-line poem where he was saying, "I'm not, not a poet. This is not my strength point. My strong point was saying something like short squeezes or short positions. What is borrowed and what is in his soul must be bought and retrieved. Otherwise, you go to prison, something like this." It was just nice to watch. I was like, really, wow, bravo! This is exactly what's happening right now. And it kept on talking about this topic. It kept on getting juicier and juicier. It was telling and what happened back in the days, that there were pools of investors that they were colluding and joining their capital to conduct these corners, the short squeezes campaigns. Does it ring a bell to any of you guys? No, Wall Street is not Wall Street Bats Reddit subgroup. The group is not something new. Its predecessors have been here before, and they'll most likely will be here afterwards. The author also added, by the way, that this is a very risky endeavor. These are also called football stocks because we're being constantly kicked up and down, up by the bulls and down by the bears, constantly very volatile, very risky. So watch what you're doing. Manage your risk. Myself, I prefer not to even stop in these risky endeavors. I have my own trading system already. I have my own capital efficiently allocated already. I'm not going to trade. This is a very risky endeavor, I must tell you. Really gotta know what you do and what you're doing here. Gotta perfect your timing, and that's difficult even for top notch best pros ever. Jim Simmons, all George Soros, all that. And that's it, guys. 8 minutes and 50 seconds already. It's time for me to delve into the stock of the day. DMC Global was the one I chose for today. I saw that while this plot, this history, the soap operas with meme stocks have been going on, this stock was also becoming very, very popular among investors, reading a lot of curiosity, becoming very trendy. So of course, detach myself from all the fundamentals, from the reasons behind its sudden popularity, and just trusting, as I usually do, on chart analysis and price action, technical analysis, looking for chart patterns, trends, EMAs, CMA crossovers, RSI divergences, candlestick patterns, the supply and demand areas, everything I ought to grasp about the clues that this market is giving us is going to be enough for me. key hints from this market, and starting off with the market structure, it's not difficult for us to come to the conclusion that this market has been in a downtrend since when? Since it broke the previous structure. I would say here, July, 1 year and a half, and then a downtrend as portrayed by this channel. Something strange. Let me get to it. New higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows is one way of objectively establishing what a downtrend looks like. Let me see the 10 EMA. Trading below 10 EMA here, so you can also say that, and respecting it, that 10 EMA is working as an objective way for you to define this downtrend. Why do you need to understand which trend it is, in which trend is the market? Because as an individual investor, if you want to have the odds of profitability on your side, and that's the name of the game, stacking more odds on your side, and combining these odds with thorough, very important, thorough risk management rules. As an individual investor, you stack the odds on your side if you trade on the same side of the trend. In this case, if you establish that the market is in a downtrend, we have the odds on our side if you're looking for bearish opportunities. However, something that we also established here with but most importantly, something I think you guys do not see often is someone using a 12-month or 1 year time frame combined with the volume profile analysis and associated with technical analysis and price action to a certain demand zone. Look at what I found here. Yeah, exactly, I found this the place where the price is trading right now. And by the way, look at this chart from the yearly time frame perspective, and notice how technical analysis works just as equally. It's fractal in this time frame. You see here, a textbook supply and demand setup. Look at this gargantuan bearish candle that happened in 2008. Price gets back to this. So this pretty much this gargantuan candle discloses the place where the bears are sitting. Price gets back down. It goes up. It goes up with lower momentum. Gets back to the place where it started, where the bears were, as established by this bearish candle. Gets back to the place where the bears were, to the supply area. This is them telling us, "Hey, I'm here. Watch out! If the price gets back here, I'm gonna shove it. I'm gonna push it down once again." And that's exactly what happened. The price went back to bear territory, and guess what they did? They pushed it as down as they could. Normally, the target would be somewhere around here, but we've seen already that this is a very valid, very important, very um, uh, this is a key demand level, I would say. So the price might be able to hold off here. Otherwise, it could end up in this demand area, as you see by this touch, also relevant. Okay, so establishes a key level. This is a very important demand area. And to say what? Yes, okay, our bias should have been on the short side because the market is in a downtrend. However, we're seeing that price is touching a key level, a key demand area, a very strong demand area. And there are good odds that this demand area serves as a break wall to the bears, and just to the price, and just makes the price bounce back into this resistance area, or overhead supply area. Having this said, uh, what else did I find on the long side, on the bullish case here? I found that if this candle is to be sustained, if the market is to close similar to what it is closing and what it's paying right now, above or above, then the odds are that the RSI plot is going to break out this downtrending, uh, this downward sloping trend line, which means that there's a momentum shift for the first time in 1 year and a half. The bulls are going to be in charge of the momentum. This can tell you that a bull run might follow suit. And on the bullish side, also once again, this is a very important. This is a very important demand area, as shown by our volume profile analysis. But if you're bearish or if you're bullish already, hold your horses because there are a lot of I mean, at least two very relevant very shit takeaways in this market in this chart. Namely, look at this candle, this candle. I mean, I won't say this I would include in my analysis, but these are like quite not proximal to what we have right now. This is where we stand right now. But as established, this is a key demand area. This is a key place where you're expecting the bull step in. And in this key area, in this bullish territory here, you're seeing not I won't say this candle is here, but I'll say this candle, which are candles with above size above average size in an area where you're supposed to see or you're expecting to see the bulls making very strong statements and very strong statements, excuse me, about their presence and pretty much into the bulls, the bears. Hey, we're here. You're not gonna step on my territory. I'm gonna react. So I would be expecting. You see this candle. This candle is also above average size, but this is simply not enough to overpower the bears here, and they react strongly. And you'd expect, yeah, bearing in mind this is a demand area, you expected a stronger reaction from the bulls, which might be aimed that perhaps they're not here or they're not here with as much strength as you expect them to be. Another clue, another cue or hint is that you also in walking hand in hand with the size of the candles, you also don't see a gargantuan amount of volume that you see from this area, which you'd be expecting. This is also very signal because you'd expect a stronger reaction, a stronger statement from the bulls in this market, telling the bears, "Hey, stop! This is my territory. I'm gonna thrust the price up with a strong volume as of here." And these might be bearish hints. Having this said, and what falls from our analysis and what we know. Okay, downtrend. We must override our idea of looking for bearish setups since the price is trading at the key support level. But we cannot be 100% confident. We never can. But I mean, we cannot be confident, so to say, that the price is going to bounce and go up because we're seeing a strong bearish signals here also. Having this said, we know something important about this market, and that is that it is trading at a key level, one, and it's also seeing an upward trending, upper down sloping trend line of this channel. What does this tell you? This is a key inflection point. This is a point of decision where decisions are taking place. What happens if the price closes below this trend line? Cuts and closes. I mean, it must close with good volume, a lot of other hints and all that. But in principle, it tells us that the odds are that the pairs which were relying on this trend line as a value zone to thrust the price downwards are not there anymore. This could tell us that the bulls are now in command and that the momentum, as we saw in the RSI, has shifted to the bulls and that the price has good odds of starting shorter term uptrends and then overall accumulating markets before an uptrend or before or a ranging market and distribution market and breaking down and continuing the downtrend. Or this candle this or the proximal candles will be decisive. Or the price suffers a stronger breakdown below this demand zone. And guess what? The bulls were holding here suddenly see a red P&L and are very keen to sell and feed off the sell-off. Or conversely, there are not many bulls here, which pretty much tells us that the bears can keep on going with their endeavor. This is the logical place for you to place your target. For a swing trade, of course, you can hold for a longer term or forever. It very much depends on your time frame, on your analysis, on your style, on your biases, and all that. On the short side, the target would be here, as we can deduct from these touches, and a stop loss above here for the bears, stop loss below this level here from the bulls, because if the price closes here, then we know that the odds are not anymore on our side, and that our idea was wrong, and that the other idea was the valid one. and we suffered a false breakout. And that's it, guys. 8 seconds. That's what I got here. 20 minutes time kept self-imposed. Hope you guys have enjoyed this content. Hope it's helpful. No financial advice.